Hello and welcome to special budget edition of TIL2. The Union Budget 2017, which happens to be the fourth budget for Mr. Arun Jaitley, the Union Finance Minister, it was full of challenge. The economy, the individual taxpayers, the firms, the HUF, all kinds of taxpayers and entities had heightened expectations. Mr. Jaitley today presented his budget and probably he did not disappoint many of them. Of course, some sectors like large corporate taxpayers perhaps will be a little disappointed because they were demanding that corporate tax rate should be reduced. Perhaps like demonetization, the government could afford another disruptive policy and reduce it to 20%. So let's take a look at the key highlights of the Union Budget 2017. On personal income tax front, taxpayers with the rate being reduced from 10% to 5% if their income is within the slab of 2.5 lakh to 5 lakh. Even as Mr. Jaitley gave something to the taxpayers, it appears that he has taken back a few $1,000 from the hands of the taxpayers, rather all taxpayers falling in the range of 2.5 lakh to 5 lakhs. Earlier, there was a rebate available for individuals in the slab of 2.5 lakh to 5 lakh. This rebate is proposed to be reduced to rupees 2,500 and available when the total income does not exceed 3.5 lakh. So that means the threshold of 5 lakh has been reduced to 3.5 lakh.
The budget, if you understand the direction of the budget, which was actually quite encompassing, but mainly in the direction of the rural area, the people who are of low income, the Dalits, tribals, I think it actually addressed the most important challenges that we have on our hands to make this country move forward.
In another interesting development, when the tax base has been a major area of concern for the central government, the tax GDP ratio itself is very low, which the finance minister talked about in the budget. He is also talking about how a major chunk of return filers, apparently they are filing return but not paying taxes. So keeping in mind the low tax GDP ratio and the low tax base and a good number of return filers apparently not contributing to the exchequer's health, apparently the finance minister has resorted to the surcharge route. And the surcharge of 10% has been imposed on individuals with an income of rupees 50 lakh to 1 crore. Earlier, there used to be 10% surcharge on individuals returning income of more than 1 crore. Now it will attract 15% surcharge. Another interesting development is the individuals and HUF carrying on business or profession will not be required to keep books of accounts if their turnover is up to 25 lakh. That means it's ease of doing business. It's a step in that direction, some relief in terms of compliance. The next development is the professionals in presumptive scheme can now pay advance tax only in one installment. This is another step in the direction of ease of doing business. Earlier they used to pay in 4 installments, now they have to pay in 1 installment. Similarly, for small businesses, as promised earlier by the Prime Minister or by the Finance Minister both, when they were talking about the digital payment and giving some kind of incentive to the small businesses to encourage payment through credit card, debit card or digital payment, the tax rate has been reduced to 6% as promised earlier. Not only the tax rate, even the tax audit threshold has been increased from 1 crore to 2 crore from 1st April 2017. Since the focus and since the government has been receiving a lot of complaints with respect to refund, since the focus is more on refund and timely processing, this time the finance bill has proposed that to ensure timely filing of return so that the refund could be issued timely, a fee has been proposed to be levied for any delay in filing return. Interestingly, the concealment and fake disclosure of information, etc., that has been a major area of concern for the income tax department, and the penalty has been normally is imposed on the assessee by the revenue. But in this case here, interestingly, a new section 271J has been inserted in the finance bill, which intends to penalize not the assessee, professionals like chartered accountant, merchant bankers or registered valuers in case information furnished is found to be incorrect. So far as the TDS is concerned, particularly from renting of property. In case of individual HUF, this is going to be quite cumbersome for them, because any rent in excess of 50,000, now the burden has been put on individual in HUF that they will have to deduct TDS at the rate of 5%. So quite a few procedural changes have been made. Time limit for making assessment under section 143, 144, it's going to be reduced from existing 21 months to 18 months. Finance Minister talked about it in the budget speech. For assessment year 18-19, and for the next assessment year 19-20, it's further going to be reduced to 12 months. The benefit of section 1023C, the donation normally to the Prime Minister Fund, is tax exempt, but such benefit was not available to Chief Minister Fund. Similarly, LG Fund, Relief Fund. So this benefit has been extended to Chief Minister Fund and LG Fund. FM has also made several changes to boost the housing sector. Of course, the housing sector is down in dumps. They are facing serious crisis. To leg up, to give them some kind of boost, to the demand for the housing sector, quite a few steps were disclosed by the Finance Minister in the budget speech. The number one change with respect to the real estate sector is the period of construction of residential property for claiming capital gains benefit. It has been extended from 3 years to 5 years. Another interesting change is that the gain earned on sale of immovable property held for a period of 2 years now will qualify as a long-term capital gain. Earlier, such a holding period used to be 3 years. A welcome step has also been taken by the government, the base year, the most significant and landmark change, which no finance minister attempted in last couple of decades, is the base year for counting the cost of property, the cost inflation index. That has been shifted from 1st April 1981 to 1st April 2001 for all classes of assets, including immovable property. However, the benefit has been extended retrospectively to the state of Andhra Pradesh for the assessment year 15-16. Section 45(5)(a) has been introduced with regard to the joint development agreement, again with respect to the capital gain, where the liability to pay capital gain tax will arise in the year in which the project is completed.
Both in terms of the affordable housing and in terms of the government own spend on the housing. 1 crore house under the PM Awas Yojana augurs very well for the industry. It has the potential to raise demand by about 25 to 30 million tons in the next 2 years. These 10 million houses are expected to be completed by FY19. So I think there's a 2-year window, and to my mind that's quite positive. Providing the infrastructure status and thereby reduction of the tax on the affordable housing again is quite positive.
That is another interesting benefit to the real estate sector. Let's move to the corporate tax. Of course, the India Inc. was having Qutub Minar size expectation from Mr. Jaitley, expecting that probably on the corporate tax side, major relief will be given to the industry. However, relief has of course come, but not for cutting across the sector. Mr. Jaitley has done his analysis very well. He has taken a look at the statistics. He has taken a look at the contribution of SME sector, MSME sector and the last sector. He has looked at the incidence of taxation, the effective tax rate. So looking at the entire matrix of facts, the finance minister today announced a huge cut in the corporate tax rate from 30% to 25% only for the MSME sector having a turnover up to 50 crore, which is certainly a welcome decision. The entire industry has welcomed it, particularly the small and medium scale industries. They are very happy about it, and it is going to give them more fund, perhaps that could be recycled in terms of private investment and expansion of capacity. So it's a welcome step. MAT has been a major area of concern for the entire industry. There has been a demand that MAT should be abolished. At least if not abolished, it should be reduced. However, there is no change in the MAT rate, but the finance minister did talk about extending the MAT credit period from 10 years to 15 years. That's a marginal relief. Of course, anything coming from the government is welcome by the industry. Then in order to rationalize the MAT provisions. The Indian accounting standard compliant companies, now they have to compute MAT before recording other comprehensive income.
I would say that the budget has done a lot on infrastructure and for agriculture and for creation of demand in the rural sector. To that extent, I think there would be a kick-off and impact on the FMCG and other food sectors. So there would be a higher purchasing power if the money is spent. But what one really missed was the fact that there would be a token reduction in the corporate tax rate. I agree that the MSME reduction is a great fillip. It will give a huge benefit to them because they are people who equally form the backbone of the society. Those corporates are in MSME. But at least one would have thought that the MAT rate would have got reduced in a token way. We agreed that increasing the credit period from 10 to 15 years would be very useful.
Another interesting with the government demonetization, the focus on digital payment, then taking measures against cash as a mode of payment. Income Tax Act has been amended to make any kind of cash payment beyond 10,000, which is going to invite seizures from the Income Tax Department. It's going to be disallowed. Any payment, any business expenditure which is going to be more than 10,000 in cash. Coming to the turf of domestic transfer pricing, the provisions to be applied only if the two companies enjoys a specified profit-linked deduction. So there is some ease of doing business aspect here, where some relief is there so far as domestic TP is concerned. Then the startup. India is one of the missions of the India government, and of course the startups, because of the slowdown in the economy, the worldwide apparently not doing very well. But however, the government had extended some tax benefit earlier. Now that benefit, which was 3 years out of 5, that particular bracket has been made 3 years out of 7. So that means a little more relief for the startups. But a major benefit has been extended to the calls, and of course the IT sector was expecting something. The government did not want to disappoint them. So the call center operations, now the TDS rate has been reduced from 10% to 2%. That's the benefit for them. Under Section 132, of course, it's a power which is vested with the department to conduct raids and search operations, and the huge powers, again has been acquired by the department, where the regions to believe to conduct search. Normally, the SSC used to demand, the professionals used to demand that it should be disclosed. Now the government has proposed amendment whereby the regions to believe to conduct search, it need not be disclosed by the department. So that's a major change. Not a good news for charitable organizations, as they will be brought beneath the purview of survey by the Income Tax Department under Section 133A. So there are other procedural changes, of course, which we will talk about in great details later. So keeping in mind on the personal income tax front, then the corporate tax front, of course the impact of demonetization, the contraction in the economy. Of course, there were a lot of other expectations, but it seems the India government, Mr. Jaitley, his hands were also tied. Probably the health of the exchequer is a concern. He has been able to take into account only the data of 9 months, 3 more months to go, the most critical quarter from the revenue perspective. So perhaps he could not really gamble with more revenue. And while winding up his speech, he talked about that the net revenue loss after giving away some tax benefits, etc., perhaps is going to be 20,000 crore. We are yet to see, we are yet to read between the lines, go into the fine prints of the finance bill and see what is more there in the finance bill for the industry and trade and for the revenue. So thanking you all for watching TIL Tube.